What's going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto, and today we are talking about the Fibonacci Retracement Tool, the Fibonacci Retrace Tool. There's a bunch of different fib tools, okay? There's not just the retracing. This video comes to us at the request of Chillowette. Chillowette, this one's for you, man. You said I could just write you a comment, but I think this is kind of complicated, and it might be better to show examples as we're talking about it, especially if you want to like match your settings to my fib. So if you click this here, fib retracement, there's trend-based fib extension, there is the fib channel, there's the fib circles, there's fib speed resistance fan, fib spirals, fib speed resistance arcs. All of those I'm sure are used by people who know how to use them and they work for them. I don't know how to use them. The only ones that I know how to use are the fib retracement and the trend-based fib extension, and I prefer the fib retracement personally. But people find significance in these, and if you find significance and it works for you, that's all that matters. It's really all that matters. I personally don't know really how to gauge these things. Just because you know one fib doesn't mean you know all of them, but they more or less work the same, right? The 618 on all of them is the golden ratio. There's probably extensions, stuff like that. There's similar levels. I just don't know how to draw them. This one I know how to draw, and if you look at it, TradingView even gives you a little outline, right? You've got this like circle here and a circle up here, right? So like you draw it down to up, right? Left to right, like that. And that's how you get your fib. Now let's start with the beginning, I guess. So if you were to get your tool, you go over here, fib retracement, and if you pull it up, right? I'm just kind of doing it in the nothingness, the vast nothingness of TradingView right now. If you pull it up and you click on it, yours, by the way, when you pull it up, it's not going to look like this. Yours will probably have less lines on it. It won't have all of these checked through it. I've gone through and I've customized mine a lot. Yours will probably be just the, it'll have the 236, the 382, the 0.5, the 618. I think it has the 786. And then from there, I don't know if you get extensions or what extensions you get. I forget. But they're on there. They'll be on there. They'll just be clicked like this, right? They won't be highlighted. So if you click them, it'll highlight it. And beyond that too, when you start the background, you'll have a little bit of this like cloud, right, in the background. If you want to make that super dense, go for it. Mine looks all weird because I have mine out of order, so they like overlap each other. But I take away my background. I get rid of it completely so that there's no cloudiness at all. Some people like that, some people don't. I like the lines, so that's what I use it for. I feel like it's easier to see. I know that it's in this zone between the 382 and the 236. I don't need the background to highlight that for me. So if you want to get rid of that and make it just lines, scroll all the way down, check your background. And then something else that's also important, in my opinion, is to go down and click fib levels based on log scale. Just click it, because if you're in log scale, what that'll do is it'll enhance this to fit it on the log scale. If you're not in the log scale, well, guess what? If I click on this and I go down, now it's not highlighted. It like forces you out of it. So just click it anyways. That way, if you go to the log scale, it'll base it for you. And if you're out of the log scale, it'll take it off automatically anyways. But I do like to use the logarithmic setting. You go over here, you click this little setting bar, click logarithmic, or if it has a check mark, you're already in logarithmic. The reason I like that is because if we look at Bitcoin, we look at the all-time history for Bitcoin. Before I really get into the fibs here, talking about the log scale, kind of going over a whole generality here. Looking at it, it looks like this, right? In the log scale, you can see it, right? And then if I take it out of the log scale, it looks like this. Dramatically different, right? It just looks like a flat line over here, like nothing was happening, but stuff was happening over there, right? I can scroll over here and you can see there's up here you can see there was a 14% day, there was a 6% day, but wouldn't you know it, both of these look the same. And that's because whenever you base it off of the price scale, not the logarithmic scale, it doesn't format it to fit the percentage growth, basically. So I'll try to explain it in a sense that doesn't use a whole lot of math or like complicated terms. I'll make it simple, right? What the log scale does is, let's act like you have $1, right? Because Bitcoin was once worth $1. Okay, you have $1, and it goes from being worth $1 to $2. Okay, that is a 100% price growth, right? That is a 100% increase. Now let's say Bitcoin's worth its current price, $29,354. It moves up $1. That's not a 100% price increase. That's a very small percentage, right? And if you're looking at this off the logarithmic scale, the $1 move will be the same down here as it is over here. It's nothing, right? It's in comparison, because now we're moving thousands, hundreds of dollars, and back here we were moving pennies and dollars. You know what I mean? So whenever you do it in log, it smooths it out by like percentage, basically. You're looking at things by growth. So like you can see here, if I follow my cursor from this line here, that's 4 cents, up to this line, that's 20 cents, 23 cents. That is a 15-cent move, essentially, 16-cent move. But now if I do from this line to this line, you go from 20 cents to $1. This looks, they're the same space, but from 20 cents to $1, now it's a 60-cent move, right? And that's the whole point of logarithmic. It puts things in a format that makes sense according to the proportion of the percentage growth and decline that you see. You know, that's the best way I can put it. I could be wrong. I'm pretty sure that's exactly what it is, but I don't know if I used the right words or not. But basically, right here you can see up here it says O for open, H for high, L for low, C for close. It tells you the total that it moved, and it tells you the percentage that it went up or down too. So here the total that it moved was $2.72 in a month. And that was a 346% increase. And that's why you got this big candle here. Over here, and again, this was $2.72. Over here on this tiny green candle, we moved up $380. You can see it over here, right? $303. And this time we moved up only 7.9%. And that's the point. It bases it off of percentage. It's not just price, it's the price percentage. So it's very, in my opinion, key when you're looking at long-term charts with a lot of data and a lot of growth from like low prices to high prices, whatever, to use logarithmic. I just use logarithmic on anything. So without getting too tight into that, let's actually look at the fibs. Let's get into the meat of why the request was brought up in the first place. So how you draw your fibs, you know, as any time frame that you want, whether it's the month, whether it's the minute, you can find fibs, okay? And what you're looking for is a range, okay? It's a fib retracement. It really should say fib retracement range, because it is a range. And how do you find a range? Well, it's very, you know, use your eyes. Here we go. So if you wanted, you could use the top here to the bottom, all of the price in between. If you're looking at it, these gray lines, this is the top, the gray line, this is the bottom, the gray line. All of these lines in between are just in that price range, right? The 0.5 is literally, and it's no coincidence that it's smack dab in the middle of these two gray lines. The 0.5 is 50% of the range, okay? And it's not 50% of Bitcoin, right? If it were to move down from the top of this range to the 0.5, that's a 33% drop. That's not how it works. It's not a 50% drop. It's 50% of this range. So all of these lines, at least the 236, the 382, the 618, the 786, and the 886, those are all ratios of the Fibonacci sequence, and that's why they're there. The 0.5 is not a ratio of the Fibonacci sequence. It's just used in the fib tool because it's a marker of the halfway mark, and sometimes you find significance on it, even though it's not a fib. The 0.69 is not a fib. I've just found enough price action to move. I mean, like you can see it tipped right there. I've seen it time and time again where price went just above the 618. I noticed it, right? I didn't have it before. It was like this. I didn't have it before. And I'm like, why does price turn around just like it holds the 618 as resistance here? I can see that, but it goes just above it. What's it doing up there? Like, where is that? And I typed in the 0.7, and that was close enough. I did the 0.69 because I like to be silly. But also the 0.69, if you know anything about numerology, this is a number of continuity, I forget what to call it, of balance. You know what I mean? So it's more than just like the silly innuendos that we give it. And that's why I also put the 0.069, because I also noticed that sometimes we found support on this area just above the 0 down here. And this isn't a good example of that, but not all of these numbers, what I'm trying to get at, are fib numbers. Now, all of these extensions from the 1272 all the way up, these are all fib numbers. They're all extensions. And what that is just, again, same thing. If you were to take 127% of this range, 127.2% of this range, that's what it is. It's not 127% from the bottom, right? That's not how it works. This is 181% from the bottom. It's 127% of the range in growth. Okay, if that makes sense. which maybe we could figure out, right? Like, no, that wouldn't be a good way. Anyways, so there are rules with fibs. There are rules with fibs, and just because there are rules does not mean that the price has to obey them. You know, it doesn't have to abide by it at all. Price does whatever the hell it wants, and it's on you to figure out where the fib is being respected, okay? If it's being respected, and if it's not, why are you using it? Like, if it's not being respected at all, don't use it. Use something else. Figure something else out. You know what I mean? And that's why we have the RSI. That's why we have the 123 MA. That's why, you know, we have candlesticks to just look overall at price action. You know, but looking at this, talking about rules, I'm going to go back into the black etherness over here now. If we had a fib like this, from top to bottom, and you can see again before I get started, right? One of the rules is I'm not measuring my fib from just here, right? That I'm not taking this and making it line up directly with the 618. I'm not putting it over here, right? I'm tying it directly to the high and the low of this range that we are now in. That's the point, right? I'm not going from this low to that low. You know, you might find significance to some degree, but that's not how you do it. What most people do is they take a high and a bottom. Some people do the closing bases. Some people do that, right? They go from the top close. If you want to do that and you find significance on it, cool, do that. No big deal. I don't do that. I like the tops more. I like to go from the actual top to the actual bottom. That's my style personally. Whatever you find works. You don't have to do that. You know, I've seen people. The guy that I learned from. That like I watched his videos on, he uses the closing periods. And I've found in my time that that's just, maybe that's better for certain stocks. It's not good for crypto. But let's see. What are we doing? Let's see here. So yeah, I want to go into the black etherness now. Let's go into the nothingness to just kind of have a little chalkboard to draw on. So your price comes all the way down, right? This is your price that you got from top to bottom. Here's your range. Now, when I'm talking about rules, there's a kind of a set of rules to go by, and you learn these more through experience than what you're going to learn now. Like, you can take notes if you want to, but the general rule is that if you want to see significance in your fibs, you're going to have to show respect on them, right? So you want to see a rejection off the 236. You want to see a rejection off the 382, support on the 236. Rejection off the 618, support on the 382. You know, up like this. And it's no coincidence that just drawing it like that, it's kind of this perfect symmetrical kind of channel, right? And that doesn't always happen. Price doesn't always work this perfectly. Sometimes you do, on the first pass, break through the 236. Sometimes you break through the 382 as well. Sometimes you top at an area that's in between the two, and then you come down, you find support on the 236, and then you do the same kind of thing, you know, whatever. As long as you're finding some significance along the way, that's the main point. That's how you know that you have a fib that is being respected, it's being watched. Trading bots, algorithms, traders themselves are paying attention to these levels. And, you know, there's kind of a psychology. I'm going to go on a little tangent here. I'm going to go on a little tangent real quick before I keep explaining. I like to explain this, right? The 618 is the golden ratio, right? And the reason it's a golden ratio, it's not just in price, it's in our psychology as well. And I like to use this as a perfect kind of idea. It's that most people, if they bought up here and they watched their price drop 50%, if they watched it drop 50%, they're not going to sell. They're not going to sell, right? I mean, some people will. Some people are too risk adverse for that, and they wouldn't hold through that whole bit. But most people, the average person, they could put $100 in, they watch it go to $50, and they're like, well, I'm in it now. I might as well ride it out. But where do most people start to sell? They start to sell when they see a 61.8% loss or greater. And that's not just, again, that's not just based off price. That's like something psychological. Like, you feel like, whatever, I'm in it for the ride. But then all of a sudden, once you go from your $100 investment being worth $50, you're like, who cares, whatever. You go from that now being worth less than $40, you're like, shit, maybe, it's just going to keep dropping. Maybe I should take some out and save what I got, buy a little bit lower, try to salvage what I got. You start getting a different game plan. You start to care more. For some reason, that's just how it is. The spirals in the galaxy, the Milky Way galaxy, are spaced out 61.8% away from each other. Like, it's a ratio that the Romans, the Greeks use this, the golden square, the golden rectangle in their buildings, their architecture, patterns in seashells, stuff like that. Like, there are there's this kind of golden ratio that emanates throughout the universe, and not just this. All of these fib levels do. If our universe had like a pattern to it, it would be based off of the fib ratio, and the golden retracement is the golden ratio is the most common of these fib ratios, and that's why it's called the golden retracement. And we just see it a lot in nature too, beyond psychology, beyond price markets. We see it in nature a lot as well. You can see mountain ranges. Like you go to a mountain, if you're looking at in a distance, you're looking at the mountain range, you can see like, here's a peak here. Where's the next one? Is it like 61.8%? I don't know. Like some people say that once you learn fibs, you start to see it in nature. I definitely do. I feel like it just takes time. You kind of get an eye for it. Maybe that's just me. Maybe I'm just crazy. But getting back to ground level here, talking about this, the general idea is that this is the most common fib to hit, and the reason for that is it's the very first one. Again, the 0.069 is not a fib. It's just a number that I put on there because I find significance on it. You don't have to have the 0.069 on there. If you want to include it, again, just double click it here. You can type any of these in. Just because it says 1272 doesn't mean you can't make it the 69704, whatever. But I'm going to make that the 1272. And you can change their colors, right? You don't have to have the same color format. I don't know, my 0.69 is that color for whatever reason. I like them to stand out. I don't want them to make all the same colors, but I might change it because that's kind of a weird color now that I think about it. 0.69, I don't know, maybe red? No. White? Maybe we can make it white, and we'll change the 886 because the 886 is a little bit too much like that. Let's make the 886 yellow. Yeah, 886 can be yellow. There we go. And I change it like that, like whatever. Your 236 and your 382 probably will be these colors, but you can keep them at the neutral settings or whatever. You can change them as you want. This is just what I do personally. They do not match. These are very offsetting colors, but whatever. I like them to kind of be offset. I like them to stand out from each other so they don't all blur together. So if I'm looking at it from like a further out, I can kind of see it. But anyways, again, talking about the rules here. I know I got sidetracked, but talking about the rules here. If you were to go up, it's very common, in my opinion, to actually bounce off the 382. It's less common to find resistance on the 236 immediately. And it's not impossible. It's not even like uncommon. I would just say it's less common than breaking above it on the first pass. And just because you break above it, again, doesn't mean you have to go to the 382. Yeah, and man, I was about to end the video because I feel like I'm talking too much, but whatever. We're going to keep it going. We're going to keep it rolling for you. Here we go. So rejecting the 382, coming down to the 236, and finding support on this area going up, this is a very good setup. This is a very good setup. You're showing support, you're showing resistance here, support here. You are showing significance on this fib scale. Likely that would mean that you're going to go deeper into it, okay? And what I would look for at least would be the 0.5, but honestly, more of the 618. I kind of disregard the 0.5 for the most part until I see it price kind of like respecting it at that moment, whatever. But the 618 area, I mainly look at the 382 and the 618 to the 0.69 areas in the immediate kind of moves. Now, you could see a move that comes up to the 236 once. It doesn't even go back to the 0.069. It comes up to it again. It finds support on it, and then it goes up like this. You could see a move that goes straight through your 618. You could see a move that goes up, finds some support on the 6.9 a little bit, right? Meanders, and then goes up. It doesn't really matter. You're never going to be able to kind of predict what's going to happen before it happens. The whole point of this is to kind of see what's happening at the moment to kind of gear if you're going to see deeper extensions afterwards. Oh, wow, I changed my, let's see. There we go. So let's see here. Let us see here. So finding significance on the 618 is very common. And I've said this in a lot of my videos, but if you find resistance on it at the first pass, don't be scared. That's normal. You might go all the way back down to the 236. You might even go all the way back down to the 0.069. You could inevitably see extensions. That is possible as well. But generally, finding resistance on it is not a detriment. It's not condemning that you're going to go down there. You know, that's not at all what my worry would be. What you'd like to see is, if you see this, you'd like to see support on the 382 or the 386 or the 0.5 area. You'd like to see support on there. And then on your next pass, you'd like to get up. If you find support on your 382 and you get above the 0.61 or the 0.618, you'd like to come back down and find support on it. If you come down and break through it, whatever, that's okay. Same kind of idea as this. Find support on one of these three fibs. And then if on the second pass, right, this is your first pass, this is your second pass, this was your first pass, this is your second pass. If on your second pass you do break through it, likely, and it's not guaranteed, nothing's guaranteed, right, but likely you will see extensions. You'll see the 1272 at a minimum. You will. Or the 1618. Does this mean that you can't top off at the 886, that you can't top off between the 100 and the 1272? It doesn't mean that. You absolutely could. You could top off in an area that's not even related to the fibs. It's possible, it happens. But it's not as common. It's not as common. It's not what you look for. You have to be aware of it, but don't, like the anticipation, if you saw something like this or like this, the anticipation, in my opinion, would be that you're going somewhere here. And I say here between the 1618 and the 1272 because even though these are part of fib extensions, this 1786 and the 1886, again, these are the same numbers here. It's just a 100% move up, a 200% move up with those numbers, 300, 400, 5. You can use all kinds of extensions. Just because they're there doesn't mean they're likely to happen. Odds are you're probably going to get turned around at the 1618 or the 1272. And the 1272 is a pretty common area to reject. It really is. And even if you're to go higher, it's still a pretty common area to reject. If and when you get up into these extension areas and you do reject them, the area that I generally look for to bounce off of is the 886. So the 886, maybe you even come back down to the 618, but that's less likely to happen. It's between the 886 and the 786 that are the more common things. If you get below the 618, that is bad. It's actually very bad. If you get below the 618, that tends to mean that this move up is over and you're actually getting ready for a move down below this zero line at that point in time. I know that's a lot. I know I have a lot of funky, misshapen, drawn lines on here, but that's kind of the general rule and from my experience that I've seen with the way price behaves. Now, does that mean that it's impossible for this thing to go up to the 1618, find support on the 1272, go up, reject, whatever, come below the 618 and then go all the way up here? No, that kind of stuff happens. It's totally possible. And at that point in time, you'd probably want to use a fib from measure from this low to this high, see where you went. I guess maybe you went down a little bit lower even. Maybe you went to the 1272 and you bounced there. And that's where you look for other fibs. You use it in relative ranges. So like here, using actual examples on the price now instead of hypotheticals. Talking about this, right, from top to bottom, we rejected the 786, okay, and we came down and we kind of bounced in no man's land. But did we? Is it no man's land? And maybe it is. I don't know. Maybe I'm going to eat my words on this, but let's see. So if we were to take now, and that was from top to bottom, now if we're measuring from bottom to top, you can see we actually bottomed in between the 786 and the 886. These are deep retracements. That's actually really good. That's actually a really strong move implied after that. If you find support down here, you closed, or you tipped the 0.5, you kind of closed right at the 0.5 even, and you went up from there. So you see this price is no longer in this kind of range. So what you would do, again, you'd flip it. You'd go from top now to bottom, top to bottom. And you can see here that you found support on your 618. You found resistance on your 886. Once you broke above it, though, again, on your first pass, you actually broke above the 618. You tested it as support. This is a very bullish thing. And you see I used 3 different fibs all in the same kind of price range, right? I started with this one back here. I moved to the inverse of this right here from the bottom to this high, and then I flipped it again over here, right? All to kind of determine as you're moving forward, you kind of do that, And does that mean that I can't use this fib over here? You absolutely could. You absolutely could. We topped off at the 1618 on this fib. From the height of the bull market to the low of the bear market, that's a fair fib to draw. We literally tipped off at the 1618. We found support on the 1272. And now look at this. What I was saying earlier, you found support on the 886. That's very common to do, especially if you're trying to go higher. And now what are we doing? We're finding resistance at the 1272, and you could take all this away. You don't even need the fibs to see we're finding resistance at previous areas of support. We found support at previous areas of resistance. You know what I mean? Like you don't need all the fibs to tell you that, but it's no coincidence that kind of stuff does happen, But again, from this top to this bottom, it's kind of a smaller range in comparison to this range. In my experience, taking smaller ranges into account, you do see deeper extensions happen, and that's exactly what we got. We got a tip right off the 2272. We literally tipped it, quite literally. Went and held the 1272, broke below it. Psych, just kidding. We had a bullish engulfing candle that brought us back above it. We literally tipped it right here as support. Now we're holding the 1618 as resistance. Could we come back down and test the 1414 as support? That's totally possible. Could we come back down and go to like somewhere in the middle, in the ether of this? Yeah, that's totally possible too. We don't have to go down to the 1414. At the moment though, it looks like we're showing resistance on the 1618, which is totally fine. We're actually hugging it. We're kind of hugging it, so maybe we go down a little bit, and the next time we test it, we'll go up to the 1886. You know, maybe we go higher than that even. It's totally possible. Maybe we only go to the 1786. Maybe we go in between. Who really knows? It's all speculation. But seeing respect on the fibs like this is nice. And the thing is, this happened so long ago that I think moving it to kind of get a better idea to here, right? This is probably going to help you more to understand it, right? And look at this. We're finding support on the 382. The next move would be at the 618 here, which is at $39,100. Okay, that's a 618 from this all-time high to the current bear market low. Now, if you were using this fib over here, the one that I just had, right, from top to bottom, the one where we topped off at the 2272. I know I'm throwing a lot of numbers at you. 2272. The white line there, it's actually just above the 1786. It's in kind of a no man's land. It's in between the 1786 and the 1886. You wouldn't have determined that this would be a good area to top off at for your next move up. But that's where you take into consideration the current time frames, a more relative fib from top to bottom, and you're like, huh, there's a 618 right there at just around 39K. Maybe we go there. Maybe we go a little higher to the 0.69. It's very common. And something that you can do to kind of assume what you're going to do is look at what it's done in its past, right? If we go to this top to this bottom here, well, it went above its 618 before. It actually went to the 786. Could we do that now? Could we go up to the 786? It's possible. Could we make a move up to 50K where the kind of top area of this was? Yeah, we could. You know, take another one into account, for example. Let's go top to bottom here. And I'm going to use this low, not this low, because this was the first low. I think this is like your double bottom. What did we do? We went all the way up to the 786. Look at that. We went right up to it. And then you came down, bounced off the 0.5, kind of in that area, and then went up. So that's once that we found significance at the 786. That's twice that we found it. And I know I have different fibs lined up here, but I haven't deleted these fibs because I want to show something else, you know. You can see here that this 2272 lines up directly with this fib's 886. It lines up directly with it. The 2618 lines up directly with this 1272, directly with it. You can see fib lines that line up with each other. There's no coincidence, man. It's literally like harmonic frequencies that occur in the price. It's all based off our psychology too. And it's no coincidence, in my opinion, that this happens. And whenever you see this kind of stuff happen, to me that says, okay, I delete this. This fib here is a legitimate fib. It's something that's based off of a previous one. Whenever I see this fib lining up with the 1272 at the 1886 there, I'm like, okay, this legitimizes this fib even more. And I can take away the noise if I want to. And even if I don't want to, I could measure back all the way back to here from this top to this bottom and see that, okay, I topped off at the 2272 here, right? Go to this one, topped off here from or I guess not from there. It'd be from this one, top to bottom. You topped off at the 2272 right there as well. Like it's kind of cool, man. Kind of cool how that happens, you know. So Bitcoin likes the 786. It likes the 2272. At least, you know, from this perspective, you can see that. And it's not always, right? It's not always going to do that, but that's something that it's done in its history. It seems to like those lines. You bounced off the 1618 here, found support on it. You went all the way up to the 2886 up here. Could we make a move higher? This would be all the way at $257,000. Could we make a move all the way up to the 3618? We could. We could go up to the 4618. We could go up to the 6886, the 6618, you know, blah, blah, blah. We could go all the way up. I think I have a fib that goes, yeah, the 2618, which I think that is a crazy number. I don't know if we actually see that in my lifetime, but or any of our lifetimes, but maybe we do if the dollar collapses. But I feel like I went on a tangent here showing these examples. I'm getting kind of like excited. I feel like a nerd, but it's really cool to see these things line up with each other. And it's just how it is, man. I don't know how to explain it other than that it is just how it is. It's like, why is the sky blue? Okay, we can go into the science of it. We can go into the science of it if you really want to, why the sky is blue. But I'm not, and I'm sure there is science, and I know that there is science behind this. But the main thing is, it's just a pattern that's recognized throughout our universe. To put it in simple forms, it's a pattern that's recognized throughout our psychology. And even without psychology, it exists out in the world. We're literally beings that function off of this kind of stuff. It's kind of crazy, man. And again, this kind of structure, whenever you see things that are like classic, right, where you come up to extensions, you find support on the 886, generally when you see this means that you're going to continue further. You like to see this. I love to see whenever you go into extensions coming and bouncing off the 886. I love that. I love that because that means you're going to see deeper extensions. And where are these deeper extensions? Right, when we break the 618, the 1618, where are these deeper extensions? Well, the 1886 is at 100,000. The 2618 is all the way at 392,000. You know what I mean? Like that's just nuts. We topped off before. If we take, I'm going to take this guy into account here. Again, from top to bottom, we topped off at the 2886 2 cycles afterwards. Right? Could we top off at the 2886 2 cycles afterwards now? Could we do that now, right? And where would that take us? That would take us all the way up to $644,000. Could we do that? I think it's possible. It's something that's similar. And even if that's not possible, somewhere in this deeper extensions in the twos, I do think it's possible. At least say 200,000 Bitcoin is what we're probably due for in this coming cycle. I know it sounds crazy being here. Bitcoin's going to 10x or whatever, but it's Bitcoin. It shouldn't seem too crazy. We can go on other assets. You can go on like let's look at gold. Let's just look at gold. We don't talk about gold ever, right? On the monthly here, I'm going to use the 3 month because gold is a little bit of an older asset. Right, each of these candles takes 3 months to form from bottom to top here, and I'm just drawing this. You can see how I draw it, right? I click my fib. I'm not choosing this low. I'm not choosing this top and measuring here, right? You can see where and why I'm drawing these connections from this low here to this high, from this move overall. You came down and you bounced at the 382, and you might say, well, that's not a bounce at the 382. It didn't actually touch it. This is actually really bullish. When you see a common line like the 382 and you're bouncing just barely above it like that, that means there's so much demand, there's so much focus on this area, whether it's because of the fibs, whether it's because of like something else, who knows, maybe I could move this up to a more immediate low. Let's see, to like the last low we had. You closed right at the 382 right there on this fib, and yes, this fib works as well as this one works. There's no like one way to skin it. There's a bunch of ways to skin it, you know what I mean? And seeing this kind of move, to me, it actually looks very bullish. And likely what you're going to get, whenever you see this kind of stuff, you're likely going to get an extension based off of this range from top to bottom. And the extension at a minimum would be to the 1272 to the 1618. This is the area that you look for in the immediate term. Does that mean that the deeper extensions are not at play? No, they could be. They might not be. You don't know. We're too far away to really figure that out. Let's see how we interact with the 1272 first. Let's see how we interact with the 1618. It's all about an idea. It's like a roadmap. It's like a I don't know, like a workout regimen. Okay, if you stick to this plan, if you follow through with this, and you cross this checkpoint at the right time, whatever, you're gonna get ripped. If you skip out, you only do leg day, and then you skip out on chest day. Well, you're not gonna you're gonna I don't know. That's probably a bad example to give, but ultimately, guys, I'm getting a little lost here in my analogies. Sorry. We can even go in on this range here. You can go on the daily time frame. I know I'm using a bunch of big time frames. You can even go on the daily time frame and find significance on these very small fibs, right? If I take from the top here to the bottom here, you found significance on the 0.5. You found resistance on the 236. You found resistance on the 382. No, you didn't find support on the 382, but that's okay. There is definitely respect on this. So in my opinion, likely you're going to make a move somewhere around the 618, which, wouldn't you know it, is a support range that we had before at this kind of topping area. Now, if I take this back out to the 3 month, look at how like You know, like, would you draw a fib there? I wouldn't draw a fib there, not on this chart, right? I would more draw the fib from this bottom to this top. I wouldn't think to do that. But that's why when you go in on these smaller time frames, even looking at the 1 hour, go to the 1 hour, it works on across all time frames, guys. It works across all time frames. And looking at this, you know, you can see, okay, this is like the overall range from top to bottom. It's a whole different chart now, right? So I don't know, fibs kind of deserve the perspective that you're giving them. So here, you could even measure from this low to this high and see if you're finding any significance there. And sometimes you don't. That's okay. You know, this, especially on smaller time frames, you know, it's not really too uncommon because they're less significant. You know, they're significant for a shorter amount of time. But I don't know. You found support on the 382. You're rejecting the 236 area. Now, what's not a good idea to do is if you're drawing this fib and you're like, huh, but it's showing support, it's showing significance back here. This is before I drew my anchor down here to here. So all the price action in between, this is before the fib came into play. So you would never know that this is the 236 until you got your top, which you just didn't have yet. So don't try to play that game. Sometimes it can be helpful, right? If you're kind of like trying to line it up, you're like, where will it top at? If I put the 618 right down there, could this be a topping area? Maybe. If I take a low to a high, or a high to a low, and I get an extension, you know, the 1786 is right up there. Maybe that lines up, you know. Going back to that thing I showed you earlier with a bunch of Bitcoin's fibs kind of lining up with each other throughout history. Man, I feel like I'm just like getting very lost in this. I feel like I'm explaining it. I don't know if I'm explaining it well. I hope I'm explaining it well enough for someone to understand this if they're watching. I know I'm kind of jumping all over the place, but I'm just giving a bunch of examples to kind of hope that it sticks. You know what I mean? I'm not being like too textbook about this. I don't have anything written in front of me. I'm literally just going off the top of my head. So I hope that this doesn't lose anybody. And if it does, you know, maybe you just weren't interested. This isn't the kind of stuff that you want to learn, and that's okay. You know, whatever. Or maybe you understood from like the first minute. Maybe you know how to do fibs. You don't need to see this kind of stuff. I don't know, but the general rule, if I was to leave with like closing comments, and I'm going to do that, I'm going to wrap this up here. General rules with fibs, you can look them up yourselves. You can go on Google and look them up. You can read books about it. You can see what other people have to say. You know, there's all kinds of formations. If you really want to get technical, man, look up harmonic patterns. Get into harmonics. These are all about fibs, man. If you understand fibs, you can learn harmonics, and harmonics are a thing, and they take time to identify, but like anything, they take time. You know, it just takes time to understand. And this is what, like, harmonics, that's kind of blurry. Let's see if it shows. I got the white screen of death, so now we're chilling just for a second. I've seen this happen before, and it just takes a second. Shouldn't have done it. Overloading the screen. You know what? I'm gonna get a cookie while I'm at it. Oh, there it is. I'm gonna be right back. Oh. But you can delve into harmonic patterns. This isn't. We got the white screen of death for no reason. That was kind of lame. Images. You know, it gives you rules, right? The bullish Gartley, the bearish Gartley, the bat pattern, the butterfly pattern. And you wouldn't be able to identify any of these. The bullish AB equals CD pattern. It's like a rhombus. You wouldn't be able to identify any of these if you didn't understand fibs, because these are all based off of extensions, off of retracements, stuff like that, you know. This A to C, this means you have a high and a lower high. The lower high goes up to the 886. And then generally what happens when you reject the 886 or the 786, you do see extensions, which is exactly what this is. From this move to this move, it's a 1932 extension, or a 1618 extension from this move to this move. You know what I mean? So that's kind of how these things work out. There are harmonics that happen in all charts. They do happen in Bitcoin. I'm not going to take the time to go identify them right now. But if you want to learn more than the rules that I'm about to say, there's a lot of resources out there for you guys to learn. And once you understand, you have a general grasp on fibs, I really do recommend looking into harmonics because they're pretty cool. They are pretty cool. And I actually know how to identify harmonics, and I feel like I dabbled in them a little bit and I found some success with them, but I like to kind of keep my analysis simple. I don't like to do things that like people look at and they're like, whoa, how does he do that? And I know that the whole reason I'm explaining this is because some people don't know how to analyze fibs. They don't know how to draw them, but this is like the ABCs, right? Where this is like learning how to read and write. It's a little bit different. You need your ABCs first. So learning the ABCs, learning how to draw your capital and lowercase letters here. If we're drawing a fib, I'm going to delete this here, and we go from bottom to top. Let's say we're going from bottom to top. And nope, no. Sorry. Let's go from top to bottom. Okay. So you've come from the upside all the way to the downside, and now you're moving up. What you want to look for is how do you interact with these levels first. They're your first levels. You want to look for that. Generally, you will go through the 236 and up to the 382. Sometimes you find resistance at the 236. If you find that, I would expect that either you come back down to the 0.069, you go lower, or more likely, if not the 0.69, more likely you'll kind of hover in this area and then break up to the 382. And if you don't break up to the 382, maybe you break a little bit above the 236, find support on it, and then you break above the 382 or something like that. So what you want to see, and what's very common behavior in fibs, is you want to see this kind of stair-stepping pattern where you're finding support and resistance amidst the fibs and you're going up like this. You know what I mean? You want to see that. You don't want to see something that's like janky like this, where you come up to the 382, you find support on the 236, now you're finding resistance, or on the 0.069, now you find resistance on the 236, you find support in the middle of nowhere, you come up to the 618, you go all the way back down to the 236, where I feel like you should have found support on the 382. You don't want to see that. That's not the kind of stuff you expect. It's more methodical than that. It's more like, stair stepping upwards. That's kind of the formation you want to see. Do wonky things happen? Do weird things happen? Can you go all the way up to the 618, find support on the 236, go up to the 886, come back down to the 0.69, go up and find extensions from there? Yeah, it does happen. It's just not common. It's not common. So the expected thing to do, really, to put it simply, is pay attention to these levels. Whenever you break above the 382, the next levels that you pay attention to would be the 68 to the 69. And the 69 is not a fib. It's just a level that I've identified, and I found enough significance around it personally to keep it in mind. Maybe even the 618 to the 786. And then if you find resistance once, twice on the 618, likely when you break it on the third time, and you likely would break it on the third time, maybe you have like 3 days here where you find resistance, 3 days here when you find it. I'm talking about a pass, right? A general pass. Even though you took 3 days to form this resistance, that's one pass, that's two passes, you know what I mean? If it takes you 3 passes or more to break the 618, you will likely find resistance at the 886 or the 786 and be met with the end of your move. You will likely find that. If you break above the 618 before your second pass, right? Or maybe you do it on your first pass. You come back down and find support on it. This is the most bullish look. Breaking above the 618 on the first pass, finding support on it, you are likely, I don't use the word guaranteed, but you're basically guaranteed to go to the deeper extensions, basically. If you find resistance on it, and then you break it on the second pass, that's okay. It's the third pass that's not okay, right? It's the fact that if it takes once, twice, and then on the third time, I would not expect that you see extensions. You very well can still, but likely you'd find resistance on the 886 or the 786, and likely it wouldn't just be resistance, but it'd be a topping area. And maybe you don't go lower than this low. Likely, I think you would. But what you'd want to see is support on the 382 or the 236, these base fibs, and then you'd want to get back above the 618. If you can do something like that, I would forego these lower prices here. And how do you project these lower prices? How do you figure out where you're going on a fib basis? Well, that's very simple, right? You just take your range, from your range, how you measure from top to bottom, Now you measure from bottom to wherever your top is, right at the 886 or the 786 or whatever, and then you have a whole new fib level, fib range to base off of, right? And you'd want to hold that 618 as well. You wouldn't want to show the things that you're wanting to see for growth on this fib. You wouldn't want to show that on this fib because that would mean growth to the downside, right? I don't know. I hope that makes sense. I hope I didn't lose too many of you. And if anybody found this interesting, I hope it's helpful and not detrimental. I hope I didn't make people more like confused, but I myself can be confusing. I know what I'm trying to say. Sometimes I have a hard time at trying to say it, especially whenever I get comfortable and I get lost in my own zone here. But if you have any questions, feel free to ask. We're gonna have the Discord running soon, and it'll be a better channel to kind of just like interact that way. And I can just post examples instead of using my words to confuse people. But generally, the way you draw fibs, again, is top to bottom. It's very, very easy to identify that, at least, right? You go into the daily here, totally different look, and that's where we measured these fibs here that you wouldn't have measured on the monthly. Bottom to top here, we found support on the 236 a few times. We even went above it like this. And generally this kind of look, breaking above the 100 like this, would be the 0 would be an example of seeing extensions, continuation, but we didn't get that, and there were some other reasons for that. We had bearish divergence on that. That's why you use other indicators. That's why I really like the RSI. The RSI, if you're using fibs, you should definitely use the RSI. It can help prevent catastrophes like this from happening. Support, now it's resistance. We are literally stair-stepping, right? We found support, came down, now we find resistance. Next thing we do is down, so stuff like that. Very classic behavior to kind of ping-pong in between these levels. But, and then, if you look at the 1 hour, again, you can draw fibs that you wouldn't draw on the daily, which from here, just one more example, from low to high, you kind of went to the 618. You broke below it on the first pass, right? You broke below it on the first pass. You bounced off the 6.9 area. You came back up and you broke below it again. You disrespected the 618. This kind of behavior, sure, you went back above it now, but right, all you did was form a lower low or lower high. And where'd you form that? Right at the 236, right? So, and now you're getting lower highs again, right at the 382. When you disrespect the 618 like this, I very much do expect to see extensions. And that's why I'm fairly confident that Bitcoin, along with the rest of crypto, is likely going to go down below 28.7 to around 28.380. But also, keep in mind, when you take a small fib range like this, and this is a small fib range, it's very common to see deeper extensions, at least to the 2s, if not the 3s even. And this might look like a big fib range because we're on the 1 hour, right? So in perspective, it looks kind of average or like a bigger range. But if you go to the daily, that's just this little guy here. That's just this little tiny thing here. So seeing deeper extensions off of this from bottom to top going into the 2s is totally, in my opinion, an expectation, especially with the disrespect that we were showing on the 618. And you wouldn't be able to see that disrespect right here. It just looks like a bunch of wicks. That's why you go to the 1 hour. That's why different fibs line up better with different kind of time scales. And that's on you as a trader, as an analyzer, to dissect this thing from all time frames to kind of get a general idea of it. What might be bearish on the 1 hour might be bullish on the monthly. And if it's bearish on the 1 hour, that means, okay, maybe you have a small move to the downside, but overall on the monthly, you see this greater fib that's going to be more respected. Maybe you go down, that's a good opportunity to buy, and you're going to go up from there. That's how you fine tune your abilities at being able to identify buying and selling zones, and little trading zones like that, And right now, I definitely think off of this, this fib here, we're going down. I think that we're going to go down at least to the 382, but probably below it. We'll probably see the 618 area, maybe even the 786, because we know that Bitcoin likes the 786. And you wouldn't even think really to measure that on a fib basis on the monthly, because look at just how, I draw that. Like, you're measuring from this bottom to this top. Why? Why would you look at that? That doesn't make sense to me. It makes sense because we know why. We just looked at it, right? But it would make more sense to look at this fib when you're looking at it on a monthly scale. if we go down from here and we find support at the 382, oh no, that's a good thing. That's a good thing. So again, back to where the shorter time frames can be bearish, but the longer time frames can be bullish. That's where you kind of fine tune those abilities to catch good areas to buy. Will we likely find support on this 382 around 27.4? I think so. Could we wick below it as we did previously, but still close right at it like we did previously? I think so. You know, any time below this, you know, and this is on a monthly basis, so the month of August, we might be below this line for 2 or 3 weeks, and then the last week we come up and we close above it, something like that. That'd be really good. You don't want to close below this line, but even if you do, it's not all over. We still have the 236 in mind, but I don't know. That's I feel like I'm just going on and on and on, and I could go on all day about this, man. This is a very long video, but I got a lot to say. So if you stuck around, if you watched the whole video, leave a thumbs up. I very much appreciate it. If you guys have any recommendations on how I could better bring this to the table, or any questions at all that I did not explain, that I left open-ended, please ask, please inform me. I'm learning how to talk myself, you know. So while I'm bringing this stuff to the table, if you guys have anything that you want to bring to the table, please leave it in the comments. I will be happy to read it, acknowledge it, and take it into consideration, because you know, I know I'm not the best talker, especially whenever it's stuff like this. Like I can get lost. So I hope I didn't lose any of you guys, and if I did, I'm sorry. But with that, if you like the video, leave a thumbs up, subscribe to see more, and I will see you guys on the next one. Take care.